All right, everyone. Well, welcome to this month's webinar. We're super excited to have Shant Ocean here from Guaranteed Rate. Shant is an absolute legend in the mortgage industry. Just a little bit about Shant, and I'll let him kind of take over and give a little intro. But he's been Guaranteed Rate's number one loan officer 8 years running, the number one loan officer nationwide for 5 years running, and that probably might even be dated. Most importantly, he's a Bentley alum, just like Greg and myself. So we're super excited to have him. Shant, if you don't mind, maybe give us a little background, a little bit about your story, and then we can kind of get into the meat of everything.
Yeah, no, I appreciate it. Thank you so much for being here, having me here. I've been in the mortgage business about 20 years. It's actually the only thing I've really done since I left Bentley. I fell into this business. I started out, doing business very locally, in Watertown, Waltham, Belmont, like those suburbs, and obviously eventually ended up doing a lot of business in the city. And then since then, I've expanded our business to where we're doing business nationwide now in all 50 states. And it's been great. We've got a really great team that supports my business. The office is located right here in Waltham, but we do residential mortgage business all around the country. We don't do any commercial business. Somebody's buying a primary residence, second home, or investment property, whether you're a first-time home buyer, seasoned investor, we cast a pretty wide net when it comes to residential mortgage. So what we do that's a little bit different than most is like we're set up to where if you come to me, I'm aligned with 80 to 90 different banks at all times. So I can go out to the market based on what a client's goals are, figure out, what they're looking to accomplish, and then match them up with the right bank to get them the best terms possible. And so that's I work at a firm called Guaranteed Rate. Also got a wife and 3 kids. Also Bentley, my wife's Bentley alum as well, and maybe one of my kids will be one day. We'll see. So
Future Falcons, maybe. You never know. One could only hope. That's for sure. That's great. That's great. So I think a good place to start would just be to, we always get a lot of questions about the current state of the market and what's going on. So maybe like, what's your team seeing, just, having the boots on the ground, kind of being in the thick of it day to day?
Yeah, it's probably the most interesting year of the mortgage business that I can remember since I've been doing it. So I've been at this literally, this is my 21st year in the mortgage business. And so what's going on right now is, it's extremely busy on the purchase side. What we're seeing is lots of demand from potential home buyers. The challenge has been 2 things. Lack of inventory. We've never seen lower inventory. That's been persistent through the last couple of years, but it's gotten even worse this year because what you're seeing is there's a lot of people that aren't putting their homes on the market because they've got rates in the 2s and 3s. So when they go to potentially move and they look at what their options are and maybe have to have a rate double or triple that, it's not as appealing. So there's a major lack of inventory due to, homeowners being kind of locked into those low rates. So it's less appealing to move, even though they have the most equity they've ever had. On top of that, there's been a massive lack of new construction. So because of supply chain issues and whatnot. So there's just not enough housing coming on the market. So why that's a good thing if you're a homeowner is obviously, or potential homeowners, home prices have actually continued to go up even in the face of rising interest rates. So, and that's the second challenge, affordability, right? So you've seen home prices increase. Now at this point, as of this past month, there's never been a time in the history of the U.S. where home prices are more expensive than they are right now. Homes are, we're forecasting now that we're halfway through the year, home prices appreciate when it's all said and done this year. Now there's 6 to 8%, following 6 to 8% last year, almost 20% the year before that. And then, the big story has been rising interest rates. The Fed just raised rates again yesterday. And so you're seeing the Fed funds rates, I think, hit a 22-year high as of yesterday. And, mortgage rates have kind of been hovering in the mid 6s almost all year. And then what else is going on in the marketplace is, you had at the beginning of the year a ripple effect that we're still feeling a little bit is, you had banks like Silicon Valley Bank, First Republic Bank, and Signature Bank, go out of business. And so you've seen a lot of big national banks as well as regional banks kind of pull back on lending. and being very much more interested in bringing on deposits and kind of creating some liquidity for themselves. So that's, there's less money available, less credit available than there was before. Now, good news is first-time home buyers have never had more attention paid to them in terms of products from places like Fannie Mae, Freddie Mac, FHA, and VA. There's still plenty of credit available. We had bigger June, bigger July from a purchase activity standpoint than we did last year. So last year at this time, rates had just spiked up and everybody paused. This year, I think you've seen home buyers kind of readjust their budgets, get ready, kind of understand what the new payments and, really be prepared for this market and remain, in the market because their need for housing hasn't gone away. And on top of that, you've had rent prices go way up as well. So when they're comparing sometimes being a renter versus being an owner, with rent prices having gone up, 30, 35% over the last couple of years, there's benefits in home ownership. So I guess there's a lot of things going on. I could keep going for like another 20
Now,
minutes.
I think that's great. We did get a question here, and I know you probably can't completely predict the market, but where do you see from your data home prices going next 12 to 24 months? Do you see these interest rates starting to compress those prices, or do you think this going to still stay at the top?
I think they're going to keep going up, and because I think inventory is going to remain depressed, and I do think rates are probably going to come down a little bit just in the course of the next, like mortgage interest rates. I think will start to come down as inflation data. Historically speaking, interest rates follow inflation, and inflation peaked last year at 9%. We're getting new readings here. Obviously, last month was very positive, and this month we expect to be positive as well. This month coming up, so we think inflation is going to be, stay between that 3 and 4% range. The Fed said that their target number is to get inflation down to 2%, and that's almost their entire focus. And so mortgage rates tend to follow inflation. The reason they haven't, but it's usually lagging indicators. So like, we do think that rates have peaked, and they're going to kind of hover in this 6.5, maybe a little bit higher, a little bit lower. But then we think we're headed towards like rates in the 5s next year. And as rates come down, more affordability is created. That'll create even more demand. Mortgage applications are down about 30% this year. And the reason they're down is because a lot of people that can't afford the higher interest rates have taken themselves out of the market. But when rates come down, those people all re-enter the market and excitement's created. So that will drive house prices up a little bit as rates come back down into that 5 range, which is what everybody seems to be forecasting. And inventory, again, there's still a bunch of people, like rates aren't going back down to the 2s and 3s, possibly not even the 4s. So there's a bunch of people that aren't going to sell. And then new construction is so backed up. I mean, especially in a place like, Massachusetts, where, we do a big share of our business, or the Northeast for that matter, there's just not enough new construction. They can't build fast enough to level off inventory. I mean, there's a 1 to 2 month supply of inventory across the country right now. A balanced market is 6 months. So it's all about supply and demand. Home prices will continue to go up pretty modestly. And on top of that, stock market's had a great year so far. So there's like some wealth created. It's been on a big rebound, depending on all the indexes for the most part. So that that's been positive. And on top of that, income's gone up. So that's helped with some of the affordability issues, and that's why home prices continue to increase.
Yeah. So the follow up question to that, is if you were in the market right now, would you say, hey, this is how it is, I got to get in the game now and buy, or is this something you're gonna have to wait out a little bit? With the interest rates maybe cooling, but the prices probably still going up.
Yeah, I actually think it's usually, especially in the short term, like the next 6 months, like I think it's a great buying opportunity because typically the fall and the winter markets are actually even better to be a buyer in than the spring. The spring's very competitive. Last year it was like the last fall was like the perfect time to buy. If you look at when home prices depressed a little bit last year, it was in the fall, and they shot right back up. So I think you want to buy, even though it's counterintuitive when rates are higher, because there's much less competition when rates are a little bit higher, and generally in the fall there's less competition than a spring market because a lot of people have either renewed their leases or stopped their home search because they want to keep their kids in their school system, whatever reason. So I think it's a great time to buy now when there's less competition, and then refinance when rates come down, because when rates come down and you waited as home prices go up, it's like your payment likely could even be more, even with a lower rate and a higher price point to purchase it. So I think now is the time to strike.
Yeah, that makes a lot of sense. I was going to ask too, are you seeing this as a kind of a pervasive state of the market, like across regions, right? And also just to let everyone know, so Shant's team is licensed in all 50 states. They do business in all 50 states. Obviously, they're headquartered in Mass and in a big concentration of businesses there, but they do business everywhere. So is it pervasive everywhere? Are there any like kind of call out differences that you're seeing?
Yeah. So